SpaceX may be a once-in-a-generation company, but great company does not mean great entry price. Nobody wants to miss the next Amazon. Nobody wants to miss the next Tesla. And with Elon Musk, the fear of missing out becomes even stronger because he has already turned impossible stories into real companies before. But do not forget, even Amazon once fell more than 90%. Tesla also went through years of production hell and near bankruptcy risk. The same stock that becomes a once-in-a-generation winner can still destroy late buyers if they pay the wrong price. So the real question is not simply, is SpaceX a great company? The real question is, at this IPO price, are investors buying the next great company early, or are they already paying too much for an expected perfect future? SpaceX is not being priced like a rocket company. It is being priced like the next Amazon, the next Tesla, the next Nvidia, and the next global telecom empire. That is exactly why this IPO is so fascinating and so dangerous. Here is the problem. A great company is not automatically a great entry price. And when a stock comes to market at a valuation this high, investors are not just buying today's business. They are buying a future where everything has to go right. So today, I want to answer the question most investors are really asking. If SpaceX becomes public, should you chase it on day one or wait for a better price? To answer that, we need to break down for things. What is SpaceX actually making money from? Why is the story so powerful? Why is the IPO valuation so aggressive? And most importantly, how much future success are investors already paying for today? SpaceX has three major business layers. The first layer is launch. This is the rocket business, and it is the foundation of the whole story. SpaceX changed the economics of space by making rockets reusable. NASA used to spend about $54,500 to send 1 kilogram into low Earth orbit. Falcon 9 brought that cost down to around $20 per kilogram. And if Starship reaches its long-term target, the cost could theoretically fall below $100 per kilogram. That is not just an engineering achievement. That is a cost curve revolution. By the end of March, SpaceX had completed around 650 launches. More than 85% of those launches used reused boosters. In 2025, SpaceX reportedly carried more than 80% of the global mass sent into orbit. This is why SpaceX is not just another aerospace company. It has built the infrastructure layer for the space economy. But here is the catch. The launch business is not the profit engine yet. In 2025, the space segment generated more than $4 billion in revenue, but it still lost about $657 million. So rockets are the technology engine, but they are not the cash machine. The second layer is Starlink. This is where the story becomes financially serious. Starlink is SpaceX's satellite internet business. In 2025, this segment generated about $11.40 billion in revenue and around $4.40 billion in profit. That matters because Starlink proves something very important. SpaceX can turn space infrastructure into a real commercial business. It does not have to depend only on NASA or government contracts. It can build a network, sell services, and generate profit. For investors, this is the key bridge between science fiction and financial reality. The third layer is AI. And this is where the story becomes much bigger, but also much more speculative. After acquiring xAI, SpaceX started presenting itself not only as a space company, but also as an AI infrastructure company. The company's own market framework points to three massive opportunities: around $370 billion for space, around $1.60 trillion for connectivity, and an enormous $26.50 trillion for AI. That number is powerful, but it is also where investors need to slow down. A total addressable market is not revenue. A market opportunity is not a cash flow. And the massive future does not remove execution risk. Part of the AI story is easier to understand. SpaceX wants to build orbital data centers in space powered by solar energy and cooled through space radiation. Deployment could begin as early as 2028. That sounds futuristic, but at least the logic is clear. AI needs more compute. Compute needs energy and cooling, and space could theoretically solve some of those constraints. But the bigger AI opportunity is enterprise applications, which is much harder to define. This is where the story becomes more abstract: AI agents, knowledge work automation, decision optimization, enterprise productivity. So, SpaceX is asking investors to believe it can connect rocket satellites, AI compute, and software intelligence into a new infrastructure empire. Could that happen? Maybe. But it is not priced like a maybe. It is priced like a future that is already partially assumed. Now let's look at the valuation. SpaceX came to market with an initial valuation around $1.75 trillion. Some scenarios put the number closer to $2 trillion. Its 2025 revenue is estimated at about $18.70 billion. That means the IPO valuation implies a price-to-sales ratio of roughly 94 times. At a $2 trillion valuation, the PS ratio would be about 107 times. That is extreme. For comparison, Saudi Aramco listed at around 5 times sales. Apple and Google were around 10 times sales at IPO. Meta was around 28 times sales. Even Nvidia at the peak of the AI boom traded around 40 times sales. SpaceX is coming in far above that. Now, bulls will say Amazon and Tesla also looked expensive in their early years. Amazon had around $24.50 billion in revenue in 2009. By 2025, its revenue reached roughly $740 billion. That is about 30 times growth over 16 years. Tesla also had an incredible growth cycle. From 2013 to 23, revenue grew from around $2 billion to about $96.70 billion, almost 48 times in 10 years. Nvidia grew from about $4.70 billion in revenue in 2015 to more than $200 billion by 2025, roughly 40 times in 10 years. So yes, history shows that extraordinary companies can grow into valuations that once looked impossible. But here is the hard part. To justify the current valuation, some models suggest SpaceX may need to reach around $1.10 trillion in revenue by 2035. From $18.70 billion today, that would mean about 59 times revenue growth in 10 years. That implies around 50% compound annual growth for a full decade. Not for 1 year, not for 3 years, for 10 years. That is a very high bar. It is higher than Amazon's 16-year growth path. It is more aggressive than Tesla's strongest decade. It is also above Nvidia's explosive AI-driven revenue expansion. So the real question is not whether SpaceX is an amazing company. The real question is whether the valuation already prices in too much perfection. Because the market is not just betting on Falcon 9. It is not just betting on Starship. It is not just betting on Starlink. It is betting on a full-stack future. Reusable rockets, a global satellite internet network, AI data centers, enterprise AI applications, military and government connectivity, direct-to-cell satellite service, space manufacturing, maybe even Moon and Mars infrastructure. This is not one business model. This is a portfolio of civilization-scale bets. And that is why the valuation is so difficult. Now at one more layer Elon Musk control. Before the IPO, Musk controlled the majority of the high-vote shares. SpaceX has multiple share classes. Class A has 1 vote. Class B has 10 votes. Class C has no vote. After listing, public investors mostly receive the lower vote structure, while Musk keeps effective control through Class B shares. His voting control only falls from roughly 85% to about 84%, and the structure gives Class B holders the ability to elect a majority of the board. In other words, SpaceX is public in financing but still private in control. For some investors, that is a feature. They are not buying corporate democracy. They are buying Elon Musk's execution machine. For other investors, that is a risk. Because if you buy the stock, you are effectively accepting that the same person who created the premium also controls the governance. That is the Musk premium and the Musk risk. So here is my take. SpaceX may be one of the most important companies in the world. It may also become one of the most powerful infrastructure platforms of the next 20 years. But at this valuation, investors are not paying for what SpaceX is today. They are paying for what SpaceX must become. They are paying for Starlink to scale massively. They are paying for AI infrastructure to become real. They are paying for orbital data centers to move from vision to execution. They are paying for SpaceX to keep dominating launch. They are paying for Musk to keep turning impossible timelines into real businesses. That does not mean the stock must fail, but it does mean the margin for error is very small. The emotional trap is simple. People look at Amazon and Tesla and say, I do not want to miss the next one. But they forget that even Amazon once fell more than 90%. Tesla also went through years of production hell and near bankruptcy risk. Great companies can create life-changing returns, but they can also create brutal drawdowns before the story is proven. So my final question is this. Is SpaceX the next Amazon or Tesla in its early stage? Or is it already being priced as if that future has mostly happened? For me, SpaceX is not just an IPO. It is a test of how much future public markets are willing to buy upfront. And when a company is priced for a perfect future, investors need more than belief. They need a clear understanding of the price they are paying for that belief. This is not financial advice. But if you are looking at SpaceX, do not ask only whether the company is great. Ask whether the valuation gives you enough room to be wrong.